All
EXP
right. So,
right now. I just checked.
oh, $115. That's awesome. Yeah. So I was, last time I checked, it was like 102, $104. So it's already jumped almost 11 more dollars in the last 2 days or so. But anyways, in that example, if the stock is worth $100, they when they split it, now I have two shares of at $50 a piece versus one share at $100 a piece. So what does that do? That creates buyer motivation. That creates buyer enthusiasm and affordability. And so what happens effectively is more people jump in, more people buy stock that otherwise wouldn't. And the best example I can give you is like Google, Amazon, all these big name companies. If you try to buy a share of their stock now, you can't buy it because it's $1,000, $2,000 for one share. And so they've already been through their growing phase of when it was, nothing, and then it grew a little bit more, and then it split, and then it grew a little bit more, and then it split again. So to create value or to create almost a currency, just like the Fed does when they print dollar bills based off of consumer confidence, that's kind of what companies do when there's some success that's happening with the company and more people that are interested. What's interesting, and I'm going to go back to it later, but what's interesting is all these apps. I'm going to tell you about a few this morning, but all these apps that allow you to buy partial stocks that used to not exist. The generation before us, and some of us on this call, your generation, when you were buying stocks, you had to get a stockbroker. You had to actually hire a financial um, planner to purchase on your behalf. Well, now you can buy stocks from the convenience of your smartphone. Um, but so that makes it a lot easier. However, people don't like to buy stocks that are absorbently priced and with the potential of losing. If I lose 10% on a share that cost me $1,000, that's $100 I lose in one fell swoop. If I lose 10% on a share that only cost me $100, then I've only effectively lost $10. And so I'm more apt to buy more of it. So hopefully that horse is dead and explains why this split is so important and valuable to you, and you still have time to get in while the coal is hot, while the iron's hot. So, anyways, it says EXP's innovation is centered around agent success, whether it's in the real estate industry, the Verbella's work from anywhere technologies, or the personal development space as presented by Success Enterprises. So let me talk about Verbella and what that means and what success is. So EXP World, when you downloaded that on your computer, that technology was developed over, I don't know, 11, 12 years ago by EXP as a way for them to host their cloud-based brokerage platform. So they own that technology 100%. That actually has a value to it. And the reason I say that is because the value, go ahead, the value that is created from that, you have a lot of other Fortune 500 companies that in the wake of COVID-19, this pandemic, are looking for a better way to interact with their employees without bringing everyone into an office. And so that's how Zoom, if you haven't bought Zoom stock or any stocks like that, you might want to look into it because a lot of employers are starting to have their employees work remotely from home offices, but they still need to connect and they still want to make sure that there's an easy way to do that. And so Verbella has almost taken Zoom, if you will, and has added, as funny and comical as it is, they've added an avatar to it. So it's not just my face talking to you in my camera. I don't have to look in my camera to interact with you, but I can walk up to you with my avatar and have a conversation. And so it makes it more interactive, which effectively makes it more fun, which effectively um, makes it more productive. So I get on that because here's the thing for me. This is what was important for me. I decided recently I'm going to invest heavily in the short term in EXP while it's growing, and we'll see how things go. And I might back out a little bit down the road, but right now I'm going to invest heavily. And what really inspired me is the fact that they almost have more than one company that's already successful. It's not a startup company. Verbella's already has many Fortune 500 companies that are clients that are using this same platform. And so if anything happens, and things will, right? EXP as an overall corporation has Verbella to kind of cushion their value because they have another product they can sell. So on one hand, they have this virtual brokerage that agents are joining by the thousands. I think maybe over 1,000 a week are joining. And then on top of that, they have this totally different company that we get to take advantage of as a EXP agent, that they're selling and making a profit on that. And then as of recent, not even, gosh, I think it's probably been 3 months ago, they bought Success Magazine. And if you're not familiar, Google Success Magazine. Success Magazine is basically like a magazine for um, business owners, really. And it's had some years of great success. And so I don't know what the purpose of it was. I don't think it was from a money standpoint or from a profitability standpoint. I think they're trying to get to a point where they have a way to reach their audience and have a strong media to do so. And they already have a network set up through Success Enterprises. So, anyways, we'll see what comes with that. Um, Furthermore, our decision to effectuate this stock split provides added flexibility to continue leveraging various stock programs for our agents, brokers, and staff and help fuel our growth, says Glenn Sanford, the founder and chairman. With the continued success of the company, we believe this stock split represents another positive milestone in eXp's growth trajectory. As always, we're focused on innovation and delivering an overall value proposition to our agents, broker staff, and customers. So they have the full-fledged the network, if you will. Everybody's included in their thought process, which I like. Um, when I was affiliated with other brokerages or other brokerages or franchises, if you will, I think that their focus started to narrow in one direction or the other. They couldn't really figure out how they could appease the investor and the agent, or the agent and the customer. I like to read, this news clip about how it's a full thing. So this is just a little bit, in case you didn't know, eXp is one of the fastest growing tech companies in the world with more than 42,000 agents. Put that in perspective, when we joined on October 1st, they were at 36,000 agents. And to put that in even more perspective, I think the last time I checked, Remax had like 104, 105,000 agents. I think they had a net growth year over year of like 2 agents, which is bad. It means that they're actually regressing instead of growing. So that hopefully that puts in perspective how quickly this platform is growing and how quickly people are joining. There's agents in the United States, Canada, the United Kingdom. They've opened up Australia, South Africa, India, Mexico, not even 3 or 4 months ago, Portugal, France, and they're continuing to scale internationally. And it's a lot easier for them to do so because they're virtual. As a publicly traded company, they provide real estate professionals the unique opportunity to earn equity awards for production goals and contributions to overall company growth. eXp World Holdings and its businesses offer a full suite of brokerage and real estate tech solutions, including its innovative residential and commercial brokerage model. They just opened up their commercial branch, I think 2 months ago, and other professional services, collaborative tools, and personal development, and they're cloud-based. Here's why I'm putting all my chips on black here. The one thing that has really stood out to me about eXp is whenever they announce something else or they bring something else that's a profit center for them, they always figure they're always thinking about how can we include the agent in the profitability of this new thing. So, for example, you guys heard recently we made the announcement with America's Preferred Home Warranty. The old way we used to do it was we collected as a firm, we collected that $100 service fee, we put it in a pot, we use it towards our agent appreciation events. Because we switched over to EXP, I had 2 choices. One choice was I could still collect it, or the second choice was I could do what EXP is doing. And what they're doing is they're splitting that 50-50 with the agent, which I think is awesome. And they have the architecture to do that. They have the resources to do that. It'd be a accounting nightmare for me to do when we're just a small, bold firm, boutique firm. Um, so when they bring in, for example, they're talking about introducing mortgage to EXP, and we're working out the details. But when they do that, I can guarantee you they're going to figure out a way you, the agent, can benefit from utilizing that service. Doesn't mean, I don't know what the answer is. I don't know if you're going to have to get your mortgage license. I doubt it. But I think there's going to be a way that you can effectively recruit loan officers to the EXP platform and actually gain revenue share from that. Insurance companies, title insurance, um, contractors. I mean, the list is endless, and you guys have to understand that we're part of a network that creates and stimulates the economy as a whole. When you sell a house and you get a commission, it's way more than just your commission that's being reinvested into the economy. The attorney's getting paid, the home inspector's getting paid, the mortgage company's getting paid, taxes are getting paid. Um, and I can go on and on. The buyers are going to buy new furniture for the house. It's just stimulating all these things, and it's growing the economy. And that's one of the reasons why North Carolina, the governor decided to make real estate what do you call it? Somebody help me. What was the term they used? Something. It was people who had to work and people who didn't have to work.
Essential.
Essential, yeah, essential worker. There was some kickback on that. Why do real estate agents get to work and I don't? Well, it's essential that real estate keeps going because it stimulates so many other things in the economy. So that's the point there. Anyways, so I'm going to jump off that and kind of let you guys know where I have been and where I'm going. And then, we'll open the floor for questions, comments. Love to get feedback from you guys. And if you guys, as always, I'm going to invite you to activate your cameras. I love the faces. It really helps me present to you. So if you're able to, please do. I put on my makeup and did my hair for you this morning. It doesn't matter if you didn't, if you're still laying in the bed. But at any rate, the other thing I want to do is kind of give you the history of what happened when before I decided that, hey, I think this is a good thing for us to join EXP. I knew from day one it was a good platform. I knew from day one it was going to explode, and it's still going to explode. It hadn't even exploded yet. The match hasn't even been lit yet. What I didn't know at the time, and what I wanted to converse with a lot of you who were with us at the time was, is it good for us? Is it good for the agent? Because effectively for me being the owner of Bold Realty, it was good. I was getting really comfortable with collecting transaction fees from the transactions you guys were doing, and finally gaining some profitability after years of being affiliated with a franchise and having to pay a franchise fee, and all the expenses were all on our plate and all the work was on our plate, but we were finally balancing out. So it was tough. It was truly tough to say, okay, if I go to EXP, effectively, it means I'm going to have to share the profitability. And so I talked, of course, everyone who was here at the time know we talked about it. And I think it was a fairly simple sale. Not as it was easier than selling you guys on switching from Remax to going independent, I think, as a whole. But there were a lot of questions. Here's what I knew from the beginning before we even made the decision to pull the trigger. This was going to be great. And when I heard they were public, the first thing I did was purchase about $6,000 worth of stock. It was about $6,200, I believe it was. And I kind of kept an eye on it. I told you guys I was going to continue to keep an eye on it. And at that time, I bought the stock for right about around, I believe it was like maybe $21 a share. And that was in September. So, Anna just shared how much the stock is worth today, $115 a share in this very short amount of time. And now it's going to split. So let's say it goes down to $60 a share. I'm going to buy more, and I'll guarantee you if it's already gone up to 115, it's going to go up at least that much again. So hopefully that kind of, for those of you who are not that familiar with the stock market or how stocks work, and I'm not, I'm learning from investing. This kind of, hopefully this gives you some insight on purchasing stocks, how the whole thing works. I'm not up here trying to strangle you guys into buying EXPI. There's a lot of other great performing stocks out there. What I want to do, my best intent on this call is to entice you guys to engage into learning different ways to create passive income. Because, and if you don't hear anything else I say on this call, hear this: the market is going to turn. What we're experiencing now, the success we're experiencing now, the fact that we got more buyers than houses to sell to them, interest rates are at an all-time low, that will not last forever. When that will change, I do not know. And this isn't a statement of the sky is falling, but what this is more of is this is kind of a wake-up call to you guys that you can't depend on one source of income. And a lot of you already aren't. You already have different sources of income. Some of you own rentals. Some of you already have, full-time jobs that you're working. Some of you are already invested in the stock market. But just imagine, and here's something that I was talking to someone just yesterday, Tyler. I was talking to Tyler about kind of what my mentality is. What my observation is, and I don't know if it's true or not, is usually when the stock market crashes, it usually has an effect on the real estate market. It usually crashes. In fact, 2008, it crashed as a result of the real estate market. Subprime loans had expired and people couldn't pay their mortgage anymore. So guess what happened? What did that do to real estate values? They went down. So guess what? If you want to be a real estate investor, when's the best time for you to jump into investing in real estate? When the stock market crashes. So before that happens, what do? You pull out. I'm not going to say sell out. I would say you pull out what you need, because you need to keep that seed there. You're going to lose money in the stock market. That's how it works. But pull out what you need to take advantage of what's going on in the real estate market and maximize on that. And then when the real estate market is on the upswing, right, and you can't buy anything because it's all overpriced, guess what? Usually the stock market is doing pretty well too. I mean, it's an even flow a little bit, but that's a good time to maybe, okay, I'm not going to let my money just sit idly in a savings account or a CD that's gaining me a negative inflation. I'm going to put it in the stock market. So always kind of, that's what my plan is. And that's under development, but that's kind of how I think about it. How do I allow money to keep working for itself? So let me share with you, first of all, the ways that EXP allows you guys to take advantage of their growth. And to do that, I got to share my screen. So the first thing you're going to do is, we all are familiar with this page. I'm going to share that real quick just to show it to you guys. There it is. You're going to go here. You're going to hit sign into enterprise. You're going to click on that. And then when you click on that, it's going to take you to here. Let's share that. And I'm just taking you step by step. It's going to take you here. Everybody's familiar with this. If you're not familiar with getting here, please unmute yourself and tell me right now, because we need to do some work. And it's okay, because sometimes I move faster than what I should, and I leave some people behind. But at any rate, this is the box you're looking for. The ShareWorks by Morgan Stanley. ShareWorks is the manager for EXP that's managing their stock program. You're going to click on that. And when you click on that, and I went through it with somebody yesterday, it's going to prompt you to do a lot of things. And you guys are welcome to do it as we're talking about it. Feel free, but you have to register. You're going to have to put your social in there so they can issue you a 1099 for your gains. You're going to have to set up your account. You're going to have to do all these things before you can actually access your dashboard. So let me tell a funny story while we're going to that place. The first time I logged in here, when I first signed up, I didn't even think anything about ShareWorks. All I cared about was how in the hell does SkySlope work? Because I need to get transactions in the system so I can get some closings done and not be behind. And how in the world do I walk around with my avatar? Because the mouse wasn't working. I just kept bumping into walls. And I think I virtually sexually harassed somebody once because the only thing I could do was walk into them, and I kind of entered them. It was like two people mixed together. So we had to figure that out real quick. By the way, here's a tip for your avatar. Don't use your mouse, use the arrow keys on your keyboard. It'll keep you from walking into the wall, and it'll keep you from walking into people, and having virtual harassment charges filed against you. At any rate, let's move on. So I finally got around to a point where I was like, well, let me look around, let me see what's going on, and if this EXP thing is really that good. And probably 2 months, 2 or 3 months had elapsed by that point, because this was only like a month and a half ago. Yeah, about a month and a half ago. I log into ShareWorks, I set it up, and lo and behold, I already got like, I don't know, $12,000 worth of shares that have already come into the system that I didn't even know were there. These are the talks, and a lot of times I hear from people, agents who become frustrated because how they used to do real estate and how they have to do it now, it's just not worth it to them. And it's like, okay, well, let's reevaluate why you came in the first place. One of the places you need to stop is in ShareWorks, because you have what we call vested shares that are available immediately, and you have shares that have to mature. And it takes 36 months from the day they're purchased for them to mature. So let me back up a little bit. One way that I can get stock is when I sign up with EXP, when you go through the onboarding process, one of the questions they ask you is if you want to participate in the equity program. And I don't remember if that's automatically selected and you have to deselect it, or it's automatically deselected and you have to select it. But I almost, if anyone knows or has done it recently, please feel free to chime in.
So I'm doing it right now. So what was your question?
Well, you can't because you're already onboarded. So when you first sign up for EXP,
Okay.
yeah, go ahead, Willis.
I'm pretty sure that you have to select it. I don't think it's already selected for you.
Okay, you came in blurry. So if you will hit the chat box for me, and I'll follow up with that. Go ahead, try again. What was it you were saying? Unmute.
Can you hear me now?
Yes.
Okay, perfect. Yeah, I think it's not selected. So I think you have to, it tells you about it, and then you have to select it yourself.
Okay. All right. So those of you who are signed in already and not sure if it's already selected, you should know, because when you close a transaction through SkySlope and it tells you, you get that DA and it tells you 20% is going to EXP, $40 is going for your E&O, $25 for your broker management fee. And then it will actually, when you calculate the numbers, if it's off by about 5%, it probably means you selected to actually invest in the stocks. Another way to do it is just to go into EXP World. Click on EXP World. Don't be afraid of it, guys. Go to the state broker room, walk to the desk and say, I got a stock question. Where do I go? And they will tell you exactly where to go and who to ask. And if you're not already a part of that program, you can select to get into it. Now, here's the thing. If you select to get into it, it doesn't happen immediately because they have cycles. So you may have to wait a month before the enrollment is complete. And the same goes for if you want to get out. It may take a month for you to recycle out of the system. Otherwise, it would create, again, an accounting nightmare. So at any rate, when you do that, EXP takes 5% of your commission, your gross commission. They put it in a pot. And when the time comes to do a mass stock purchase, they buy everybody's stocks that have money in that pot at a 10% discount. So this is a way to really build up your stocks fairly quickly, doing what you already do, selling homes. You're not going to miss the 5% because you never had it. It's not like I gave it to you and now you have to give it back to me. Most people are probably investing and don't even know it. So unfortunately, your ability to maximize that is limited to how successful you are selling real estate, because you can only invest 5% of your gross commissions, meaning you have to sell more houses and make more gross commissions, but it's at a discount. So that's one way, and that's you paying for it. Let's talk about the second way that EXP is involved in stocks and how you can take advantage. It's called the stock rewards. So I'm going to use Marlon, for example. Marlon says, hey, I want to join EXP. I really love what I see. I say, great. I sent him the onboarding email, which all of you got when you guys signed on. He goes through the process, and you guys remember in that bold red, I kind of edited it to be the sponsor that it should be based off of, and here's my thing with sponsorship. I'm not going to get in, I'm not going to go too far down this rabbit hole, but sponsorship is simply this, guys. It's the person that talked to you about joining EXP. It's not me. It's not necessarily me. you're going to be involved with me. I'm going to do a lot of training and development with you. But a lot of times I may say, hey, Marlon, I need for you to make Denise your sponsor. And there's a method behind my madness, because the reality is this, there's 7 levels. I'm the highest level locally for our team. So what I'm trying to do is create a wealth pyramid that stays local on the bold team before it reaches outside of our team. Because if we all succeed, then we all succeed. So that's my whole point with it. And I just want to make sure you guys are aware of why I'm doing that. And sometimes I may say, hey, Marlon, I got an appointment with a new agent and I don't have time to take that call. Will you take that call? And, you know, that's a recruiting opportunity for you, and it's going to benefit both you and I. I'm not going to lose, guys. In fact, if you're my tier 2, I actually get compensated a little bit more, a few $100s more than effectively than if you were on my tier 1. So just keep that in mind and think about that as you start to build your teams and build your network. Everybody doesn't have to be on your front line. I suggest you focus on your front line. And man, I said I wasn't gonna go down this rabbit hole, but I'll say this last thing and we'll jump back to stocks. Focus on your front line to maximize how deep you can go as far as the revenue share, because you need 40 FLQAs, fully qualified agents who are doing the minimum transactions for you to go 7 levels. You need 5 to get paid on level 2. You need 10 to get paid on level 3, and so on and so forth. Anyways, back to stocks. Second way you get stocks. Marlon joins. We said he's excited. He's ready to go. Marlon closes his first transaction. What happens is EXP says, who signed Marlon up to EXP? Who's his sponsor? Oh, they go in the system, they see it's Edric. And what they do is they reward me for helping grow the company by issuing me some stocks. And I'm going to show you guys kind of what things look like right now. I was kind of surprised because it's already grown a little bit more. Hopefully it'll sign back in. So when you click on that ShareWorks button and you have registered, from then thereafter, it's going to take you straight into your equity agent program account. So that's what I'm doing. I'm going to just do it so you guys can kind of see it here. All right. So I'm clicking on ShareWorks. And it's loading, pulling up my information. And here is my dashboard. And yours will look similar. And hopefully you'll start growing some money in there. Some of you probably already have money in there and don't even know it. So definitely try this out. But at any rate, it shows your whole portfolio. And you'll see here at the top, it has funds available versus funds unavailable. And here's the easiest way to remember what's what. The funds that I have available, this is the 5% that I contributed from my gross commissions that were automatically deducted and the shares that were purchased on my behalf. The unavailable is the stock rewards. It takes 36 months for EXP says, if we're going to give you something, we want you to be committed. It's a great retention tool because they're saying you can use it after 3 years, but you can't just get stock today and then cash it in tomorrow. So where did this accumulate from my available? I can go in here and I can see how many units were purchased, and units, think of units as shares. And then you can see this is what's sitting in the pot, waiting for the next enrollment, waiting for the next purchase. And it's going to build up because I think they just did a mass purchase, and then they're going to purchase it at the value. And I can even dig in here and see kind of what the average, I believe what the average stock price was. So a grant was issued in October. The purchase price was $38.15. I got 36 shares. And then the current value. So you can see what the current value versus what the purchase value was. And then in November it went up and what the values were. And then in December it went up. And so you can really dig in and see where that's from. Now, if I go back to my dashboard, you can see here, I have my unavailable value stocks that I have no access to as of yet because they haven't matured. And these are stocks that I got from you guys. I got this because either I sponsored you or I capped or whatever, and I was rewarded, and that happens automatically. Nothing you got to do for that. You have to enroll in that. You don't have to do nothing. All you got to do is sponsor people, attract people to the company. So if you don't want to put the 5% in, at least start talking to people about how great this is. And I'll tell you, this makes it a lot easier when you start to build it up to show people, hey, this is real. Like, this is real money. I remember 10 years ago hearing about EXP, and it was a penny stock and a cartoon. It was like a little video game you went, and nobody took it seriously. This is real cash. So that's how you look at it, and this is how EXP manages it on your behalf and where the different pots are. So I'm going to take a pause real quick, and I'm going to ask you guys what questions you have and what comments you have. If you unmute and go ahead and share, and then we'll jump into the next thing.
I have a question. Okay, so it's no way that we can buy stock with EXP, like not going on Robinhood or something like that, getting it so we can get the discount.
Yes. Oh, no. You cannot buy it. You can buy it on your own, but you do not get the discount. The only way you can get it on your own at the discount is if you're buying it through your commissions. And I'll tell you why. The discount used to be 20%. I wish I was around then. I think right before we signed up, they changed it from 20% discount to 10% discount. But they have to be able to control, Andrea, how much stock that they're offering at a discount to protect the value. If they just willy-nilly said, you can buy as much as you want and we're going to discount it, it could actually have a negative effect on the value because then it could be overfunded.
Right.
Whether, can't believe that's a real thing, but it could be overfunded and then they could be overpromising and under-delivering. So when they say, okay, you can buy 5%, they can kind of evaluate based off of what their agent count is, how much commission is going to come in this month, and what our average GCI is going to be out of our agents this month, and how much of a discount we're going to have to give, this quarter, so that they're not losing. Does that make sense?
Yeah, it does.
Okay, but I'm okay with it. I consider this kind of, it's like a cherry on the top. It's a 10% hedge because if the value drops 10%, I haven't lost any money yet. If the value goes up 10% with this stock, I've actually made 20% on the part that's 10% discounted. But it doesn't hold me back from buying it at full value because it's still going up. So that's a great segue. But before I jump into it, what other questions, comments do you guys have?
So basically, we just got to go on Robinhood or something like that to buy them.
Yes, and I'm gonna and I'm gonna show you guys how to do that because I like I said earlier in the call, I'm vested kind of heavily right now because of all the momentum that's going on, but it's not the long-term thing. I don't suggest that you guys, if you're going to go in the stock market, put all your eggs in the EXP basket long-term. What I'm suggesting for you guys is if you're not in the stock market, to start here because this will get you excited and then branch out and diversify your portfolio. So when you guys say, I don't want to sell houses, I'm sick of buyers, you can say, I'm okay. And here's another thing. It's not even about retirement day. It's about what happens when something unforeseen happens in your life, good or bad. Usually it's bad, but it affects your ability to sell real estate. you know, one good thing is if you log in here and you see that you got 7 figures saved up because you've been with EXP for 5 years, and so it's not the end of the world. I don't have to go get a job to make ends meet. That really makes, that just changes who you are as a person. It changes your mentality of what you will and won't put up with when it comes to clients and what type of business you will and won't do, because you have that nest egg kind of set aside to help facilitate your living expenses. If it's not a retirement fund, it's kind of something to carry over. I tell a lot of you guys, you know, one of the reasons why I'm still in real estate today is because I decided to get into property management when other agents were kind of laughing, thinking it was the dumbest thing I could ever do. And I really suffered because I lost a lot of opportunity, sales opportunity, because I was so busy trying to grow property management. But when the market tanked, I saw agents get out of the business, go get a job because they couldn't sell any houses. And fortunately for me, I had enough property management to keep the lights on. I mean, we weren't living the high life, but we were able to survive and not have to transition into what I call a real job. All right. Any other questions?
I just want to say thanks for kind of showing us the process. I don't know, I was always wondering every time I was going through a different aspect to see how much I had.
Yeah.
And I didn't know this was there. So thank
Yeah,
you.
super simple. It was a little complicated, but yeah, I mean, once you get it, I love it because it's right there on your dashboard. You can check whenever, and I like to set it and forget it. Like I looked at this yesterday to prepare for this session today, but before then, I haven't looked at it in over a month. I might check it once a month. And don't be alarmed if you know that you should have more stocks, because again, I believe they buy it once a quarter. So that money's probably just going to sit around for, you know, depending on when they deduct it from your commissions until it's time for them to make that mass purchase. All right, so let me show you guys another way you can purchase stocks in general, because this is actually while I'm on the ShareWorks. You can purchase other stocks through ShareWorks. You can actually start an account, and it's a lot like a traditional brokerage where you get assigned like probably a stockbroker and they can purchase other stocks. So if you want to do everything in one place, this is a great way to do it. I just didn't do it because I already had a stash account. And so, like I said, before I even signed up for stash, before I even signed up for EXP, I already had the stash account before, and I purchased through my stash account. Stash, Acorn, there's so many other ones that are popping up every day. It's basically an app that you can download on your phone. So simply go on your phone, go to the app store and look up Acorn or Stash or whatever. And once you do it, you'll have to link up a bank account that you want to transfer funds into it. Stash, I'm not that familiar with Acorn, but I'm pretty sure they're similar. Stash will allow you to actually set up a checking account. I actually have a debit card that's attached to it, and I can use it at ATMs or to make purchases, and I can transfer back and forth from my other checking account into my stash account. So I like that part about it. And I'm sure Acorn is the same way. But here's what I like about apps like this. Say the EXP stock does go up to an amount beyond affordability. It used to be where if a stock costs, you know, $1,000, that's what it costs. I mean, a share rather. And that's what you had to pay for. Or you would have to like buy into a fund that would give you access to it. With apps like Stash and Acorn, you can buy what's called a partial stock. And I'll into my account really quick.
You could do it through Cash App too.
You can invest in stocks through Cash App?
Mm-hmm.
Oh, that's awesome. I didn't know that.
Yeah, I have a few through them.
Okay. So whatever works, whatever floats your boat, I would say when comparing, look at how do they make their money and which one is gonna, based off of your goals, which one is gonna be the least expensive, because all of them charge something. I like Stash because I got a basic account and I think they charge, I just pay like a flat fee monthly. They don't charge me based off of purchases or when I sell, and if they do, it's very nominal. But the Stash, And I'm going to be as transparent as possible, guys, because I really want you guys to dig into this. So I have both a retirement portfolio and a personal portfolio. I don't have any money in my retirement portfolio. And the reason why is because I actually have a retirement plan through our payroll provider, through the company. So with IRAs and whatnot, there's certain rules, and you can only invest a certain amount per year without getting penalized with the IRS. So I had to pump the brakes because I was getting a little crazy, and I want to give the IRS as little money as possible. So anyways, once you get into this account, or once you get an account through something like Stash, what you can do is, and here's what I do like about Stash. There's platforms that teach you about the different stocks, how to invest in the stock market. They have classes, so you don't have to like go in there blind. I don't like to go through classes, so you may not want to follow how I do things, but I basically look at companies that I use and I think, am I the only person that uses this, or is everybody using it? So when the pandemic first hit, and at the time I think we were using gosh, I forgot what it was called. It was before we went to Zoom, we were using another platform and it sucked. I said, I'm getting Zoom, and I said, this is so much better, and I bet a lot of other people are switching over to Zoom. I said, I better buy some Zoom stock. That's kind of how I do it. I look at what's going to make sense a year from now, what's going to make sense 5 years from now, based off of how we as an economy are operating. And what I love about it is, let's see here. If I want to know, for example, and I don't really use this on my desktop that much, so bear with me, but you can search stocks by category. So you'll see there's some stocks by real estate even. We know real estate. We know whether it makes sense or not. There's funds for finance, materials, and these are probably all funds. So what that means is Home Depot, Lowe's, Walmart, and another Ace hardware store bundle up together. Not the companies, but basically it's a bundle of different companies, and a fraction, a percentage belongs to each of those companies. That's when you're investing in the fund. It's a really good way to diversify, because if Home Depot goes bankrupt, you haven't lost all your money. Whereas if you're buying individual stocks, like when you're buying individual EXPI, if EXPI goes under, and I keep saying EXPI because that's the symbol for EXP, the stock symbol. EXPI is what you would look up. But if they went under and all I have is EXP stock, then it's going to affect my stock tremendously versus if it was part of a fund, a bundle of different stocks. But if you want to search for something, if it's a company that you use, and I'll give you an example. I went to, God, what was it called? I want to say it was called like Smash Burger or something in New York. And I just thought it was the best tasting burger I had had in a long time. And I was like, I wonder if they're publicly traded. I could just go in here and type in Smash Burger. And if they're publicly traded, they'll probably show up. Oh, it was actually Shake Shack. It was Shake Shack. And I went and looked. And now I can see, okay, their share price is $107.98 per share. I can see they've gone down today 1.58%. I can look over time. I can scale through here and see how their stocks have went up and down. I can look at what's happened over the last year, the last month. It will change the chart to show me the last week. And then I can see, what is Shake Shack really all about? Like, how are they designed, right? Are they a franchise type restaurant? Are they privately owned, corporately owned? Are they owned by a bigger company? But I know I love their burgers. So that's where it started. That's where my research started. Would I buy their overpriced burger? And the answer is yes. Every time I see a Shake Shack, I'm like, yay, there's a Shake Shack, let's go. So that's one of the things that, that's how I start my research. And then you can actually go up here and view their website and see what they have to say about themselves. But I recommend you could do even more research and see what other people are doing. There is a subscription that it keeps coming up on my feed, and I'm going to subscribe to it, and I'll let you guys know about it, but I heard it's really good because they are really good at pinpointing why stocks are going to perform better or worse. But at any rate, if I wanted to buy this, I would have to generally have $107.98 to buy one share. And some companies may even have a share count minimum. They may say you have to buy at least 5 shares. With apps like Stash, I can buy it. I could buy $5 worth of it and just hit buy. And it's going to give me a fraction of a share. So that's why this app, I think, is really cool. And it allows me to find out very quickly.
That's how
how
Robinhood works too.
What's that?
Robinhood works the same way. And Cash
Robinhood.
App.
Yep, Robinhood, Acorn, Stash. Look at all of them. Look at all of them, guys. I only lean towards Stash because it was the first one I subscribed to, and I just kind of played around with it, and it does the job. But I think there's some tools here that I probably don't have that Robinhood or Acorn have, and so I would recommend you guys looking at that. All right, you can also set up auto stash where it automatically takes a certain amount, so you can auto invest, and then like I said, you can link your bank account up there. So let's go back to, and I think we can close out here with just kind of summarizing kind of where we are on, or where I am and kind of where my head is. I hear you guys when you're frustrated over transactions because you submitted some paperwork and it got kicked back and you have no idea what's going on, or your commission check is all jacked up and you can't get it fixed. My response to that usually, and a lot of you have heard me say, okay, well, number one, have you been in work chat? Have you actually chatted somebody up? Have you been in workplace? These are tools that are available through eXp where you can get a fairly quick response. And lastly, have you been in the world? Because I guarantee you, if you log into the world and you go into the NC broker stateroom and you say, I have a transaction problem, they'll point you to the office to log in, answer your question, and it'll get fixed just like that. But I say that to say this. I'm not trying to discount your frustrations on transaction, what we do day to day selling real estate. What I am trying to focus on, and what I want you guys to focus on, is the big picture. We can figure out the transaction issues that we're having. And the problem for a lot of us who have been here is that we were really spoiled, because when we had an issue, we could just walk into Andrea's office and get her to fix it. But, and a lot of us may already know this, that day, whether we joined EXP or not, that day was coming to a quick standstill. It was actually stunning our growth because she could only handle so much at one time. You actually have a better reaction or quicker through EXP. It's just that you have to do something that you're may not be comfortable. It's like you got to use a new muscle you're not used to using, but get used to it. It took me a month to get in EXP world. And once I did it once and got my commission, my D8 authorization form fixed in like 2 seconds, I became an instant fan. And in fact, sometimes I'll just open up EXP world just in case I want to go in there, and I'll hit mute and just let it play in the background, and then I can go in there and ask questions. So don't be so focused on the short-term issues in exchange for the long-term gain, is my point. What does this mean for real estate in general? What do I see? What are my projections? And this is where I'll end it. It's already starting to happen. Fathom real estate, which is another virtual type brokerage, they've went public recently. They figure out how to reward agents with stock, but they're trying to figure it out because they're trying to compete. Keller Williams, who, I mean, is a lot similar to EXP, and it's not a coincidence. EXP was born from the same people who started at Keller Williams. EXP is a result of people who were at Keller Williams, saw something that was good, and in my opinion, made it better. Keller Williams is not publicly traded, not to my knowledge. If not, I know they're not giving stock rewards to agents. But as confident as Gary Keller is, I know he sees what's happening to EXP. He sees that EXP went from 3,500 agents just 3.5 years ago, to now over 42,000 agents. we're catching up very quickly, and a lot quicker than, you know, Keller Williams has grown to being the largest company they are today. So he's going to have to do something, is my point. So you're going to start to see other real estate related industries come into the business of, we're going to provide public stocks, and we're actually going to reward our agents with shares. The thing I would caution you on is, don't just jump in because you're familiar with the brand name and you're familiar with, you know, how they're set up. Kind of do your research. And the prime example I'll give you is Airbnb. They just went public a few weeks ago. And I wish I could have bought some. I couldn't get in early enough. But basically, there's this big craze, and everybody buys it up, and it skyrockets. Eventually, it's going to drop because they're going to overvalue it. And so with everything going on right now, that's one that you should probably watch over the long term. And that's just my opinion. Again, I'm not a professional in investing, but yeah, be careful with that. But I do foresee other companies, other real estate companies, just to be able to retain agents doing what we're already doing. And by then it'll be too late, because our stock portfolios will be in at least the 5, if not 6-figure places, and it's not even going to be of interest. They would literally have to, I don't think right now anybody could pay me to leave EXP based off the potential. If somebody came here today and said, I will write you a check, if Remax said, we'll write you a check for $1 million to come back to Remax, but you got to leave EXP and all your agents got to come, I wouldn't even entertain it. Not because I don't need $1 million. I'd love to have $1 million. But it's because I don't have the confidence in their business model. They're the business model of yesteryear. And the numbers speak for themselves. The regression speaks for itself. So I know it's actually going to be a negative investment for me if I don't. I'd have to figure out, actually, you know what, I'll rephrase, because, you know, we sneaky. I'll take the $1 million and we'd all agree to go to Remax for like maybe a year, however long they say we do it. And then we invest $1 million to grow it to 5 million, and we'll go back to EXP. How's that? Anyways, guys, hopefully this kind of answers some questions you guys have. I'm just kidding. I wouldn't do that. Maybe I would. Anyway, hopefully this answers your questions on how to get in the stock market in general, the different ways you can invest or be rewarded with stocks with EXP. And I think the most important part for me is why it's so important for you to really dig into this. Because when the commissions start to slow down, you want to be able to have something. You don't want to have to be like, oh God, I need to sell another house, because that creates desperation. That changes your personality. That changes who you are as a professional. So we don't want any of you guys to get to that point. So jump in now and start talking, guys. And that'll be another class. You don't have to be a recruiter to attract people to the company. I try not to come off that way. Any of you guys that I've talked to about joining our team, I wasn't a hard sell. In fact, some of you guys said, hey, why don't you go in some other places that see what's the best fit for you. But people don't know what they don't know. So you got to at least introduce them to it and then pass it over to me. I'll have that conversation and we'll talk about it together. But here's the thing. I want to have the conversation with an agent, not for my own personal growth exclusively, but because I want to see other people win. So anyways, that's it. That's all the time we have today. Unless you have any questions or comments, I'm going to end it here. Bye, guys.
Wait. Tomorrow, is it in person or is it Zoom?
Tomorrow will be on Zoom.
Okay.
Both day and night. Yeah, we'll keep doing the Zoom thing for a little while until hopefully things get better. And we'll probably start hosting an in-person meeting maybe once a month, because I miss seeing you guys in person.